US jobless claims dip, signaling stability, but the labor market remains stuck in neutral. The number of Americans filing new claims for unemployment benefit declined last week, offering a service level sign of resilience in the US labor market. Yet economists caution that the apparent improvement masks a deeper reality. The job market remains largely frozen, with low layoffs but little momentum in hiring. According to data released by the US Labor Department on Thursday, initial jobless claims fell by 9,000 to a seasonally adjusted 198,000 for the week ending January 10, well below economists' expectation of 215,000. Continuing claim, which serves as a rough indicator of hiring strength, also dropped by 19,000 to 1.884 million. However, analysts warn that the decline is likely distorted by seasonal adjustment challenges common at the start of the year. Unadjusted claims actually surged by nearly 32,000 to more than 330,000, underscoring the volatility in the data around the holiday period. Seasonal models had anticipated an even larger increase, suggesting the headline drop may say more about statistical quirks than a genuine improvement in labor condition. Beneath the number, the broader US labor market appears to be in holding pattern. Layoffs remain historically low, but hiring activity has slowed markedly. Economists point to a combination of factors weighing on labor demand and supply, including President Donald Trump's aggressive trade and immigration policies, which have damped business confidence and narrowed the available workforce. At the same time, companies are investing heavily in artificial intelligence, prompting caution in long-term staffing decisions. The Federal Reserve's latest beige book reinforced the theme of stagnation, noting that employment levels were mostly unchanged in the early January. Several districts reported increased reliance on temporary worker, a strategy businesses are using to remain flexible amid economic uncertainty. When hiring does occur, the Fed observed, it is largely to replace departing workers rather than to create new positions. Recent employment data further highlights the slowdown. Non-farm payrolls rose by just 50,000 jobs in December, and the US economy added only 584,000 jobs in 2025, the weakest annual gain in 5 years, while the unemployment rate edged down to 4.4%. Long-term unemployment remains elevated, signaling persistent challenges beneath the headline figure. Looking ahead, the Federal Reserve is widely expected to keep its benchmark interest rates unchanged in the 3.50% to 3.75% range at its January 27-28 policy meeting, as policymakers weigh signs of labor market stability against the clear absence of renewed hiring momentum.